So what we're going to talk about, and it took about 1 minute, is different ETFs from different countries, pardon me, compared to the US market. Okay. So believe it or not, we're going to go in the intro here. Believe it or not, is us, just as human beings, are always kind of focused on our city, our street, our state.
Yeah, the local bias.
There is a bias, right? Obviously, why are we doing this? Because of the news, etc. You're getting everything on the U.S. market, the U.S. Fed, the U.S. everything. Well, let me tell you, folks, there's like 190 other countries out there that
190
also,
plus, yeah.
yeah, plus that also have markets, that also have businesses, that are also based on wanting growth, right? And you can invest into these countries through the US market. How do you do that? Well, you do it through ETFs. I talked to Dylan a little bit before, and how I normally do it, I always talk about the S&P 500, the VU, that is the American ETF, right? Which has performed fairly well overall, just as averages, because the average is about 8 to 10% per year. And the last 3 years, we've had roughly 20%-ish. However, what is not being covered, at least in the American market, are that other markets, international markets, are killing it compared to the US market over the last 2 years. Some of them since COVID, but especially the last 2 years. We can have reasons behind this. Many people have reasons. Weak in American dollar, people selling bonds for the US, etc., political instabilities, many reasons behind this. But there are a few of these which have been doing extremely well. Now, the number one thing is the last 2 years, this ETF called EWY, that is the South Korean market, right? It has been up 60% the last 2 years. And this year we are looking at a 29% increase from January, right? So
year to date.
Year to date. So where are we at the US? We're at about 7 to 8% roughly. I think we're
a hell of a lot less than 29% or whatever you said.
Heck of a lot less than 29%. So then the next question is, Chris, why is this happening? Well, a lot of it has to do with their tech, their population, and with their automobile manufacturing. So all these things are having this pump up the market the last 2 years. Also, other countries which have been killing it are the country I was originally born in is Canada. It has outperformed the US market the last 2 years.
Shocking.
Why is this? I don't know. I don't know if you knew this, but why is this? Why is this? Commodities have been killing it. And we have, we've made podcasts before, at least I have, on gold, silver, oil, all these countries.
Wood, uranium, like all kinds of stuff, yeah.
etc. All these countries which are exporting, right, are really doing well because somebody needs to buy their oil, somebody needs to buy the gold, somebody needs to buy it, which is normally the
potash, they're yeah, wood, they're everything, yeah, oil.
Right. And with these, you're looking at like 40% of the market is just exports or oil, etc. So I'm just here to say there's a few things where compared to the US market is actually not even in the top 10 or 15 this year. Many other markets have been just destroying it, really. So here we are. We've got EWY, which is the South Korean market, up 29%. We've got EWP, Spain, up additional 30%. EZA, Africa, up 30%. This is
Africa as a whole, like all
countries. This is year to date, right now.
Okay.
January.
What was it? Africa? The Africa includes all countries in Africa?
South Africa.
Oh, South Africa.
South Africa. My apologies. Poland, EPD, ticker, up 28% year to date. And Greece, GREK, is up about 27%.
Are these also, are these like in the local currency, or are they dollar, are they do you know what I'm referring to?
Yeah,
Are
yeah,
they,
yeah, yeah, yeah.
are they
Do they
suffer from
switch to dollar?
vagaries of the currency, or
Yeah,
they're
part of
dollar
the
denominated?
yes, and that is part of the reason why I like to talk about this, is because they are dollarized and because they switch it into dollar, and because our dollar or US's dollar is traditionally, well, not traditionally strong, but now it's significantly weaker. You can look at the dollar index for that, folks. These international companies do very well. Their dollar strengthens,
Their
and
currency, you mean? Not
yeah,
their dollar, right?
yeah, or some countries, their currency, yeah, you're right. Their currency strengthens, which does better for the actual their ETFs. So you're getting a two-prong, well, technically three if it's an exporting country, which does minerals, etc. You're getting that the country's smaller. Smaller countries normally
Have
with a
more room to
small
grow.
will have more ability to grow, right? USA has over 300 million people. South Korea has, oh gosh,
Like 20
definitely
million?
less than 100 million. I don't
20
know their
million,
exact
30
population.
million, 50 million.
Yeah, let's say 50 million. Um, their ability to grow is going to be a lot more than something like the US. In addition to that, we're looking at other things, right? Like I said, the dollar index is a very, very good. Now, what is the dollar index? Okay. The dollar index essentially takes the basket of currencies, right, and compares it to how much the dollar will buy. So whenever you're going to a different country, say I go to Canada, if I give them $1, I'm getting a 134, right? If I'm going to Japan, I give them $1 and they give me so much yen, etc. They're all
150, yeah.
average. They're all average in showing how much the dollar index is. So you're playing three different things here. So why is this important? This is important in case something politically or anything happens in the U.S. You are shielded more so than just being in the U.S. market. You're diversifying even more than the U.S. market. So things that happen in Asia may not necessarily happen in the U.S. Although we are more global, that's another good reason to get yourself out of this. I will tell you this before we even go forward. And I know the biggest thing is expecting hyper growth, right? Like this 50-60%. I don't see that happening really because I will admit that these emerging markets, different uh, markets like I'm just mentioned, South Korea, etc. They've only been hot for the last 2 years, and there's specific reasons behind that, and I just mentioned those reasons behind that because they have lagged the U.S. market, right? But now we believe it's time. Why? Real simple. Lack of faith in the U.S. because of political, and number two is the debt, the debt, the debt. We're literally adding $1 trillion of debt every single year, um, basically every single year, and that's going to, I believe, continue to grow because interest rates are going up. Now, look, there are some countries that I clearly would not recommend. I would not recommend putting your money in something like a Zimbabwe or a crazy Sudan if their market or Venezuela has their market. I would not
Somalia?
put what's that? Oil? Yeah, maybe,
Somalia?
maybe. Yeah. My risk
Not
tolerance,
a good
I'm
idea.
not telling you to actually put money into those. What I am telling you is, oh, by the way, complete. I only own the Canadian market. That's it. That's the only one I own out of these because I am invested in Canada. Um, but I just wanted to give our audience another play, right? You're not just playing in companies, you're investing in countries, and you're getting a few different dynamics with it.
Questions?
Go ahead.
So you're not making any moves like this right now in your portfolio? Like you're not, you just, like is it something you're thinking about, or like,
Yeah, this is something I am doing more of thinking about. So to answer your question is I do have Canadian stocks, right?
yes,
And they
but you still
do
have the same bias because you're from Canada, right?
there's a little bit. Yeah, a little
The
bit of
local
bias there.
bias we were talking about. You're from Canada, you moved to the US, you buy
Yeah,
only the
yeah,
Canadian
yeah.
US.
Yeah,
Wait a minute.
slight. Um, So to answer your question, Dylan, this is something where if you see, okay, this is why I'm telling it to the audience. Dylan and I have had many discussions before about instability in the USA with regard to the debt and political. I think we can both agree on that, correct? Especially
Yes.
the debt.
Yes.
Um, Other countries tend, not all, if they're more fiscally responsible, I tend to place them at a slightly higher level than a country which is not being fiscally responsible. Simplistic, but I
Yes.
think it's fair to say. That's not to say USA does not have its great advantages. The court, the petrodollar, the dollar is
Lots of
good for now.
advantages. There's a global stability factor
Military,
being far away from other countries. Yeah, yeah.
far away from other countries in the military. I'm not,
Military. Yeah, yeah.
yeah, I'm not bashing, don't get me wrong, I'm not bashing the US. I'm just saying as a way to hedge your bets, right? Because again, this is just my own opinion. I think the growth in the next 30 to 40 years will mostly be in two places. Uh, it's definitely going to be in Africa, I think for sure. And I think Brazil. And that's why I may actually buy some Brazil. EWZ is the Brazilian. Why Brazil? Large country, over 200 million people, plenty of natural resources, right? Unfortunately, not the best educated population, but they are far away from whatever the US does, and they're far away from wherever the Middle East does in Asia. There's not, they are going to be the breadbasket, in my opinion, of Asia. That's basically that's my thesis. They're going to be the breadbasket of Asia. China cannot feed itself right now, from my understanding. They don't
Yes.
have,
Half the food that they eat, they have to ship in.
yeah, correct. So, and that food will most likely not come from USA. And this comes to the investment portfolio here. So the food will probably not come from the USA because they're currently two superpowers clashing. I believe that they're going to make higher inroads with specifically Brazil because they are the breadbasket of the world, and they don't have to go through the Strait of Hormuz, which clearly now is going through challenges, I guess, for the lack of a better word. So I see their alliance becoming what Canada and USA was. I see a Brazil China alliance where one is feeding them resources, the other is feeding them some type of cash.
What
Or
about Canada? What about Canada and China? I mean, that wouldn't that be sort of similar arrangement? Or do you think the alliance with the US is going to make that harder than
I think
Brazil?
exactly what you said, Dylan. I think the alliance with the US is going to make that a little bit difficult because of the proximity. And not that they still have that big ocean they need to they need to
Pacific
cross.
Ocean?
Pardon me?
The Pacific Ocean? You
Yeah,
mean to ship from Canada to the China?
bingo. Yeah.
Okay.
So you've got that too, right? I mean, that's large ocean. You're going to have to pass US
But
other.
same thing in Brazil, you still have to cross unless you're going to go Atlantic under China, under the Africa.
Yes, you go Atlantic under Africa.
Wouldn't they normally just go through the Panama Canal and go across the Pacific Ocean?
Yeah, but there's less instability in the Panama Canal than, you follow me? You're going that way.
And so as far as a straight line, wouldn't be a straight line, be it from let's say Rio de Janeiro from China, wouldn't that be
I,
through the Panama Canal as opposed to
it's a
under
great
Africa
question.
and
I
around
wonder what the you're. I think that's a great question. I wonder
nautical miles?
what the shipping routes are. Hold on. Routes from Brazil. Yeah. Uh, yeah. Okay. The path it goes through, like as I said, ships depart from southern Brazil, right, and cross the South Atlantic to the Cape of Good Hope. So they're not going through the Panama Canal. They're going
Oh,
south.
really? They're
Yeah.
going all the way under Africa over to China.
Mm-hmm. That's what at least it says. Route A, and then there's route B. There's route A and route B.
And which one's more popular? Is like everyone doing Route A and only a few people are doing Route B, or how does that work?
Route A, 75 to 80%. When looking at the,
Wow.
I'll just read this. While looking, and that's what I thought at first, they would just go straight. When looking at the volume of goods from Brazil to China, Route A via Cape of Good Hope, Africa is overwhelmingly more popular, carrying 75 to 80% of total trade rate. Route B is highly popular for specific types of cargo. The sheer math of what Brazil shells to China, Route A is a massive advantage. Why? Uh, it says iron ore, crude oil, choke point factor. Route B is normally okay. So route B is soybeans and grains and manufactured good like pulp. And route A is crude oil and iron ore, and it looks like the heavy stuff. So they do both, but most of it comes from Africa.
So the time sensitive stuff goes the faster way through Panama, I guess,
Yeah,
because maybe the food's gonna rot or something.
yeah, exactly. So that's my theory on it. I do see Brazil becoming somewhat sheltered from the U.S. and away from the U.S. risk, because I do think USA does have a lot more risk geopolitically, more wars. Obviously, we're getting into a lot more wars, more debt, and more political instability, right? I think that's part of the reason why a lot of other countries are pulling out of the US and going into other emerging markets. Now, the negative about emerging markets, and this is totally different from what I was saying. Now I'm going into emerging markets, ones that are growing, is that they have a high dependency on oil. So, so a high oil price is really going to kill uh, countries like Nigeria, and basically almost any place in Africa, etc., unless they're exporting oil. And even then, they still have to refine it. So it's not without risk. I also look, and Dylan and I also look at population figures, right? USA is not going to have a problem having a little bit of growth because they do immigration. Although now maybe there could be less immigration, but that's a whole other kettle of fish. But Europe, small, small birth rates, but and China and Japan, birth rates low. But Africa, very, very high birth rates. So again, with more people come more opportunity.
India too.
India, although they're good, but they're lowering, but they don't have the one child policy. Another thing, India,
Yeah. Also, the average age in India, last time I checked, was 27.
right.
They have
So
a very young population able to have kids too, as opposed to like the US, the average age I think is like 46.
which, by the way, go back to our other video, IFN India Fund was one of my investments in India. So yeah, it's another way, folks, to kind of get in there. Any other questions? Go ahead, Dylan.
Yeah. What about like corruption and fraud? Like I know I invested in the not Ukraine, but Kazakhstan, and then the CEO ended up stealing most of the company, and there wasn't really much you could do about it. In the US, you could sue him, obviously, but I mean, I could have hired, I guess, a contract killer to kill him. But like, other than that, how do I get my money out of the company? Like, if someone just does whatever they want, kind of with your investor dollars or your investor currency.
Great question. Now, with this, it should lower your risk with that because you're investing in hundreds of companies within the ETF. So obviously that's going to lower your risk, number one. Number two, as I tend to find Western democracies pretty safe. Not 100%, but so countries like Poland, France, Great
But
Britain,
Brazil has a democracy, right?
yeah, Brazil's a democracy. Although there are there's some corruption there. It's obviously not Sweden. I'm not gonna say it is, but with growth rates at like 30% and maybe Sweden at 10, it's all about your risk. I guess it's all about your risk tolerance and do your homework. I will say that South America is obviously going to be a little bit more risky, and Africa even riskier, obviously. So, but again, for me, something like Asia is not a bad play. I don't see South Korea as a place just based on their culture and their history as a place where CEO is really going to steal your money.
Yeah,
Possible.
I agree with South Korea, but I'm like, well, what about when you but what about like an India or China where you have a little bit more history of this?
Yeah, I think China, you're okay. I wouldn't say China, you're bad. I mean, have you thought of any specific scandals you thought of, business scandals in China? I mean,
I
stock.
don't know of anybody, but I've heard stories of people like investing in a company and it's all just a scam. Like the most elaborate one I heard of was a guy that was in Europe that opened a bank account in China, and it ended up basically that the guys he discovered that some guy had hired a bunch of extras and made a whole like set, and he was the camera, so to speak. So it looked like a bank. He was signing paperwork, whatever. They all were answering phones and everything, and it was never a bank. It was just basically some guy getting this wealthy person to transfer money into his funds. So that was something that happened in China.
Yeah. I mean, well, we can't forget Enron had a scandal here. So
That's true, but I mean, you could have seen that with the paperwork. You could have had a warning with all the filings and stuff like that. With this case, he actually literally flew to see the bank, and he still got scammed. So
yeah.
it's something I haven't personally experienced. I don't know anyone who's been scammed from China, but it's more something that's I would be cautious. I personally would invest in China.
Yeah. I mean, personally,
Even
I think the
India is
risk
I'm a
is,
little more like skeptical because of the number of frauds and everything that happened in that area, that
yeah, I think the
population.
risk is low because you've got normally an ETF manager who's going to do their homework, check out stuff, and you can do your homework too. You can check if you have the time, you can check out every single company and see if one is a fraud. But again, this is why I'm a big fan of diversification. When you have 100 companies and one is maybe a turd or fraud or whatever, it's the 99 others, assuming they're well. I guess it's possible they could all be frauds or whatever.
Yeah, that's would be my concern.
All
So it's kind of
companies,
like, well, what is a large percent of frauds in there that it's like, oh my God, these foreigners are just giving us money. This is great.
well, don't forget. I mean, like the fraud, I'm sure is going to hit them too, right? I mean, it's not just foreigners investing in the money. They're going to get theirs stolen. They have their courts, and they're going to say, "Hey, man, this is BS."
Yeah, I guess that's certainly likely.
Um, but yeah, no, I'm not going to say there's absolutely no risk, but I think the risk is would be extremely low in something like I mentioned. Okay, well, like I said, the top five are South Korea. I think fraud there is going to be very low. Oh, this is just year to date, by the way. South Korea, fraud there is probably low.
Yeah,
Spain,
yeah. I don't hear a lot about anybody doing fraud stuff. They have a good legal system there and stuff, from what I
Spain,
hear. Yeah, I mean,
Spain.
I think Spain has some issues, but not anything I'd worry about compared to like a Somalia or whatever.
Now South Africa, maybe you may be a
Yeah,
little more
little more
dicey.
edgy, a little more edgy.
The number four at 28% was Poland,
Again, that's pretty chill, I would say, I would assume.
and then Greece. Those are top five year to date.
Yeah.
So you've
I
got
guess South Africa would be the one I'm a little nervous on, but yeah, the other ones seem pretty safe.
so you've literally got what one, two in Europe, one one in Asia, and one in Africa. Those aren't the ones I would pick, by the way. I would pick Brazil, but yeah. So some food for thought there for the audience. Now, I was going to do, and I might as well tell this so you only got about 2 minutes. I was going to do one on Petrobras, which was actually, ironically, a Brazilian oil company.
One of the companies in the index that you're
One of
just
the,
so
probably the
proudly
companies in
talking
the index.
about.
But after doing my own homework, not it wasn't scam. It wasn't a scam. Why I didn't invest, I will tell you that. It was just their dividend payout was significantly less than I thought, and also, they had some general contractor rules in the country where it was. Long story short, is that basically the unions had a very very big play down there, so they had control on I mean the workers. They could strike at any moment, right? And that was too big of a risk. And it's risks like that. I agree, totally agree with you. It's risks like that you need to do your homework on specific companies. But for next week, I plan on having another stock, smaller stock, um, plan. I don't know what sector, so that's just we're going. Dylan, you got anything planned for next week? Any stocks or anything?
Yeah, I mean, I'm scanning biotech company or scanning, digging into biotech companies. I had one I was just looking at today. Um,
Got about a minute.
yeah, let me actually just see if I can pull it up real quick. Um, Absci Corporation. Um, so still digging into it. I'm not really a huge fan of the management. I'm really uh young, like anyways, but I'm just digging into it. But they have a really kind of like their drug is pretty good. I don't know if I really like their management, overpaid, stuff like that. But the drug is on they use a prolactin target, and they do hair loss. And that's just one of like 5 drugs they have, which the numbers that they're saying are pretty impressive on that. Obviously, the market's huge. So something I might keep an eye on. But again, if a company doesn't check a lot of my boxes, I'm just gonna kind of move on. But
Yeah,
I'm just looking through companies. So
yeah, and that's what we're gonna say. We got about 10 seconds or something. We will not do deep dives unless we own I mean, we own the company, and we've done on all our previous videos. Lots of times we'll tell you we own it. So